Hello there, it's Francis from Generational Wealth Academy. Now, on today's video, I am going to be sharing with you, a few tips that would help you make money even as a Forex trader. Or if you like, a few tips I'll be sharing with you today would help you increase your pips and profits even as you put them into practice. Okay, on this particular chart we have in front of us, it is the Canadian dollar, Swiss franc, the 4-hour time frame. Basically, I have a number of charts I want to show you today. Charts that I had marked up last week. I had marked up these charts last week, but for some reason, I just did not trade them. Mainly because I was trading, busy trading a different account. I just somehow forgot about them, even though I had marked them out. Now, today is Monday, and even before the week, the day started, I basically turned on my chart just to look at what was there, and I realized that I had actually marked up a whole number of charts, even as you can see, last week, and I just did not trade them. So basically, just to say to you, you do not want to leave money on the table, even as a trader. If it is the case that you've taken the time to mark up your charts, I would say to remember to trade them. And one of the best ways of doing that is to keep a trading journal. So that whenever you mark up your charts, it doesn't matter even if you forget how many charts you've marked up or what you had in mind. You can always turn back to your journal. It could just be a notepad, a trading notepad. It could be something from some jotting down something on iPad or on your phone, just to remind you that yes, I have marked up, for instance, CAD, CHF, or I've marked up New Zealand dollar, JPY, or Euro USD, and so forth. That way you will not forget to return to these charts, even to trade them. Look at the money I left on the table, for instance, on this Euro or Australian dollar even last week. This is the 4-hour chart. Now, assuming we take it that the price came from down here, it went and broke the zone I had marked out and came back down, retested it, came down, retested it again, retested it for the 4th time. So basically it broke here, tested it once, twice, 3 times. Okay, 3 times. It tested it 3 times, and then it began to go all the way down. Now, if I had traded it going down, let's just think of how much pips I would have gotten. Perhaps I would have entered the trade here. I mean, having been rejected, having experienced a price rejection there, perhaps I could have entered the trade here, taken all the way down. That could have been over 350 pips. That is a lot of pips. I mean, I don't know about you, but for me, that is good enough. For any week, it's good enough for yes, it's good enough for the whole week. On just one pair, over 300 pips. I mean, take it this way. After the rejection here at this level, let me see if I can zoom in a bit. Okay. Now, after the rejection at this level, you can see there was hardly any, there wasn't much difficulty, as it were, with it going down. It basically just went down. Yes, there was a bit of a retracement, and then it carried on. It just went through, it sliced through the zone I had, drawn up there, my support. It basically just went through and bounced off here. Now, that is just for one pair. Let's go to Euro USD, for instance. You can see what happened when it came from support here. It went right through the zone, retraced here a bit, forming a flag, and then continued up. Yes, it came back down and began to oscillate around here. It went all the way, and through a week and now this is where it currently is. Now, I'm not going to be going into details as to how I would have entered, this trade, but obviously you can see here, these are trades I could have taken. The previous one, could have earned me over 350 pips. Now, even with this one, even if it was just the 50 pips I got from it, that is still good. It's cumulative. It's adding to the other pairs, which I would have traded, that particular week. So that would have been good as well. And like I always say, I mean, sometimes when I trade, I go for just the 10 pips, sometimes the 20, sometimes 50, and then of course sometimes I target hundreds. When I'm doing some serious swing trading, I target hundreds of pips, 100, 200, and so forth. All that matters is, to some extent, your lot size. If you use a reasonable lot size, for even 20 pips, that could be a lot of money in your pocket. Now, that is the second pair. There was another pair. Okay, for this one, it was basically a channel I had drawn. I had basically drawn a channel, and you can see it was respecting, the lines. Basically, this is the 1 hour time frame anyhow, New Zealand dollar, JPY, and it was just going back and forth, bouncing off the channel until it eventually broke out, and now you can see what it's doing. I mean, I could have traded this a whole number of ways, and obviously made money even with this. I mean, if I was scalping, obviously, whenever I'm scalping, I would usually scalp using perhaps a top-down analysis from 1 hour chart, right through to 5-minute chart. I could have basically taken this up here, for instance. I could have taken it up. That's 89 pips. Well, that would not be a scalp, but you know what I mean. You get the picture. Now, of course, there was this one as well. I could have easily traded this. As you can see, the price came from here, bounced off this zone, went all the way up, and obviously came off the zone I had marked up there, came down, and basically you can see this could have been traded easily as well. But anyway, that is basically the first tip. That's the first tip I wanted you to get today. Have a trading journal. Keep a trading journal so that you can always refer back to it, just in case perhaps you've forgotten what currency pairs you have marked up on your chart. Even if you do not go there yourself, you could just keep a trading journal, and have some information on there as to why you have chosen those pairs and what you are looking to trade. I mean, for some of you, it could be that you don't trade price action. It could be that, you don't mark up your chart like this. It might just be that what you do is you trade using trend lines alone, or perhaps, a combination of, indicators like MACD and all that. You trade divergence, even as you can see here. I posted this on my Telegram group the other day. You can see there was divergence here and the price went down. So, I mean, it doesn't matter how or what your trading style is. Just keep a record so you know exactly. I mean, here, for instance, you can see there are a whole number of, you have the moving averages, and of course you have the Bollinger Band, which I also use a lot. So, I mean, I trade using a whole number of indicators. I trade using trading systems like Ichimoku, and of course, price action. But just to get the picture, keep a trading journal. Now, the second point, or the second tip for today, is, even as you can see here, there was a gap here. Let me just take off the indicators. There was a gap in the market. I mean, let me also include that to separate into days. This is a 1 hour time frame. So this is obviously currently today's trade. You can see we're coming to the close of today's market. Now, when the market closed on Friday, today is Monday, when the market closed on Friday, it closed somewhere around here. It closed here. But when it opened on Sunday evening, it basically gapped up. You can see there was a gap. Let me take off the period separators again. It closed here, and then when it opened, it opened here. There was a gap up there in the market. Obviously, those who were in the trade already and it gapped up in their favor, that was good. So from where it opened, or where it closed and where it opened, you easily could have gotten over 50 pips, about 55 pips, to be precise. You could have got about 55 pips if you had traded the gap. So this is the second tip. I would say, to always look for a gap in price in the market whenever, the market is opening on Sunday evening or Sunday afternoon, depending on where you are in the world. At the moment, we tend to be having a lot of, gaps when the market opens, even on the pound pairs. I'm not quite sure if it has to do with the Brexit, but obviously we have that. The last time I traded a gap in the market was sometime last week as well. It was also a pound pair. This is pound JPY. I actually also posted this on my Telegram group for those in my trading community to take advantage of it. At the time I opened the chart or switched on my computer and opened the chart, the price was here, somewhere around here. So I entered the trade immediately to trade it down, because what tends to happen is gaps in the market always tend to be filled. And that was exactly what I said on my Facebook page, or something to that effect, that I've always known gaps in the market to be filled. So if people wanted to trade it, they wanted to take it, trade it, close that gap. You can see the gap here, or you can see the gap here, and you can see the price went down. It didn't quite get to the beginning of it. It went back up, and then it came down, almost closing the gap completely. It went up again and came back to the same point, but that was good enough. So even if you had entered the trade here, I entered the trade somewhere around here, and even if you had entered there and came out here, that would have been over 40 pips. That obviously still is very good. Now there are times when there'll be a gap in the market for just 10 pips, 15 pips, but you can see on this particular pair it was 55 pips even, and that I say is good. So the first trading tip obviously I've mentioned today is to remember to keep a trade journal, so that you have all the pairs you are trading, you've marked up, and currency pairs you are looking at to trade. You'll have it all recorded in your trading journal. The second tip, obviously, even as we've just looked at now, is to look for gaps in the market, especially when the market closes on Friday, and when it opens on Sunday evening or afternoon. Look for gaps in the market that you can take advantage of, and that would ensure that you do not leave money on the table, as it were. So I hope these two tips today would indeed increase your pips and profit even as you trade the Forex market. Now, before I go, just to quickly share with you, let me see if you can see this. Perhaps you've noticed I have some pair here. Let me just try and move this. Okay, just to make it smaller so you can see that. Okay, so you can see, even as I have here, this basically is an indicator which I would like to share with you, for those of you who do trade using, moves in the market. You can see here, it talks of, sorry, let me just do this. Okay, you can see here, it talks about daily, week or monthly, and weekly. So this is basically an indicator that tells you, by how much the price has moved or increased during the course of one day, during the course of 1 week, or during the course of 1 month. So this in a glance would tell you that, since the close of the market on Friday, well, today is Monday, since the close of the market on Friday, the market has increased in price, or the price has increased, by 0.59%. The same amount it has increased by, for the week. But over the month, last month, we're in November now, the beginning of November. It means that, since the close of last month, October, to today's date, the market has, grown, or this currency pair, the pound JPY, has increased by 2.36. That is some good information for some of us to be able to make use of. Let me just quickly show you what that means. Let's go to the daily time frame. So if it says it has increased by 0.59%, you can basically see where this is. Let me take this off. This is where the price is today. This is what it was on Friday. You can see the price has increased. If you take the day before, Thursday, the market closed here on the pound JPY, and it's now currently here. Anyway, feel free to contact me, if you want me to send this indicator to you. You can leave a comment, asking for the indicator if you're watching this on YouTube or wherever you're watching it. Otherwise, perhaps the best way to contact me is via Facebook or Telegram. So I'll be leaving the details of my Telegram group in this video, so that you can actually reach me on Telegram. For those of you who don't know what Telegram is, it's similar to WhatsApp, except that it's better for business, as it were. Okay, until